Let me begin by introducing myself. My name is Jim Young. I'm the Director of Corporate Development for Legrand in North and Central America, normally based in West Hartford, Connecticut, but currently in my home in Avon, Connecticut. I will be joined today by my colleague, Jim LaPerriere. Jim is the Treasurer and Controller of Legrand in North and Central America. We'll tag team this presentation. What we are attempting to do is make you aware of a government program of which 95% of you or more are already aware of. And we recognize that. And we are hopeful that perhaps we can clarify something in your mind. And perhaps you could even share with us your learning that you may have found during this process yourselves with the rest of the group. Know that this session is being recorded. The audience is Legrand's distributors, agents, dealers, representatives, and we're very grateful of your association with Legrand. We wish you and your families the best in this crazy time. We hope that you're all well and safe. And what we hope to do in the next hour is review a fairly generous program that the government
unknown participant is now joining.
And so hopefully we can work this together, and it would be a productive time spent. Jim, anything else on the introduction before we continue?
No, I think you got it, Jim. Thanks.
Okay. So having said that, we're going to discuss the Small Business Administration's Paycheck Protection Program. We've abbreviated it as PPP. Most of this material that we're going to cover in the first half hour is already been covered within a PDF file that we attempted to distribute last night. And if you haven't received it, we'll send it again. So at the end of this presentation, we plan to send a copy of this slide deck, as well as that PDF file that I referred to, and a couple other files, including an application file. So you'll have those items. I can't do it directly. You'll receive them through the Legrand sales leader that you're associated with in your channel. So hopefully you'll receive those. Know that they're coming. So what is PPP? As part of the $2 trillion CARES Act that our government signed earlier in the week, is a component related to small businesses. And there's a group of funds of $349 billion available for loans to small companies. Small companies being defined as those with under 500 employees, or 500 employees or less. There's a great incentive to do this. It's almost free money, and the idea here, the intention, the spirit of it is to maintain your workforce. That's why they refer to it as paycheck protection. Not only is there a loan, but there's a forgiveness element, and we'll go through both of those. The loan itself is calculated on 2.5 times your average monthly payroll, and you'll see some calculations on it, not to exceed $10 million. That's a pretty big number. We also think the $349 billion number is a big number, but we think it's going to go quick. And that's why quickly we organized this call to get it in front of you. Because as you can see on the bottom of this page, applications begin today. And that's for most people. And we'll explain what we mean by that. The terms of the loan, it's a 2-year loan with a 0.5% interest rate. We've seen conflicting information on this. We have disseminated literally a couple dozen presentations and documents that you may have also received via email and other correspondences into that PDF file that was distributed yesterday. Some of the conflicting data we've seen is a 4-year loan, a 10-year loan with 4% interest. And most recently, I know from Citibank where they thought the interest rate was 1%. These rates, whatever they are, will be charged by the government, not by individual financial institutions. And from the best information we have, it's 2 years at 0.5%. The first 6 months, no payment is due. It's also, but interest would accrue. Thereafter, it basically turns into an 18-month installment loan. The loan is guaranteed by the government, the Small Business Administration, to the lender. So they're incented to do this. They want to do this. They view it as a very positive thing to do for their customers and clients. And one of the things we've learned is that certain banks will only want to deal with their existing customers, and we'll get into that, what we mean by that in a little bit. Let me see. There is a loan forgiveness element, as I mentioned, and we'll get into the formulas of it, the definition, and how it's calculated and how it's applied. And there's a second date. For those of you who are not small businesses, but rather independent contractors or self-employed, the application is delayed by a week. So your application date is a week from today, next Friday. Where do you apply? We recommend that you go to your existing financial institutions that you currently have a relationship with. We don't have a Legrand sponsored bank. We went down that avenue and unfortunately it didn't pan out. And we'll give you some examples there as well. Jim, can you see the second page here? Does it say filing begins today?
Yes, you're set.
Good. All right, so it's working. So we view the market as being flooded with these awareness pitches. So we know we're not alone, and hopefully we're adding some value here. This is a very positive program, a lifeline to your businesses. It can provide a lot of needed cash for you. It's all about speed. That's why like I said, this is why we're getting in front of you today to get your applications ready and submitted as quickly as you can. We think the money will go quick. We don't know if the government plans to do a second PPP down the road. Hopefully they will, but we hope you get your funds while they're still available. Jim and I held a few conference calls yesterday with the likes of JP Morgan, KPMG, Ernst & Young, law firm by the name of Nixon Peabody, gave us some insight, and they all differ. You all hear different stories. For example, there's a standard application, which we'll show you momentarily, that JP Morgan does not intend to use. And we also heard that on the previous call today that Bank of America is not using it either. They have their own application, and they will reject your application unless you use theirs. They will reject your application if you are not a current customer of theirs, and a certain type of customer at that. So there is a high level of frustration out there submitting these applications, and we're hoping that maybe some of you can share yours with us
is now joining
during the Q&A portion of this. Okay, that's probably it there. Jim, why don't you jump in here and address this chart?
Sure. Thanks, Jim, and good afternoon, everybody. And yeah, to Jim's earlier point, I mean, the key here is to get these applications in as soon as possible. And one point on Jim's previous slide is, clearly your best bet is to work with a banking institution that you're already dealing with. Your KYC has already been done with them. They know who you are, and you should take precedence in the whole application process versus someone coming in from the outside to an unknown bank, and you would be an unknown customer, and it would take quite a bit of bureaucratic time to get the thing rolling. So definitely go to your local financial institution that you're dealing with. But in terms of what you need to do, as Jim mentioned, there's this SBA form 2483. You have to sign and date it. As Jim mentioned, that some banks may have a supplemental form, or they may have their own form which incorporates all of the requirements that are in the small business form. So again, it depends on your bank, but it really shouldn't be a huge amount of work. We'll show you a sample of what it looks like. There's a lot of check the boxes and attestations that you agree to pay the thing back, et cetera, et cetera. And again, we'll go through that in a moment. But one of the things that we are hearing from the banks as we've discussed this with them is, hey, get that form in ASAP, register yourself with the bank, and then subsequent to that, there will be a need for further documentation. So it's first get the form in, and but in the meantime, guys, get the information that we're going to go through in a moment together. Quite honestly, you should have the vast majority of it anyways, because it's part and parcel of the amount of the loan that you're going to be filing for. So a couple things, your Form 941 from 2019, that's basically your quarterly tax filings that has all of your wage and benefit information that would be incorporated in there. So you would need to have that as proof and backup. Because we're only going through January and February, the time frame of calculating what your qualified payroll costs are from March of 2019 to February of 2020. You guys haven't even filed your payroll tax returns yet, right? For your 941. So what you'll have to do is also provide and be able to provide to the bank your payroll registers, for example, anything that would show what your salaries and wages have been paid out to your employees. And that would include any vacation time that was paid, any severance pay that was made, as well as any premiums that you would have paid in for your healthcare benefits that you might be providing your employees. Likewise, any kind of payments that you would have made for retirement benefits. So if you're contributing to a 401k on their behalf, those benefits would qualify as wages, and you would need to be able to have that documentation to support what the loan amount that you're requesting. Again, you just, as I mentioned before, you need to get those payroll registers out so that you can calculate the January and February figures as well, because you're going to come up, as I mentioned, that March of 19 to February of 2020, you're going to need to use that data to come up with what your average monthly payroll amount is going to be. As Jim mentioned, there's still a lot that the Treasury Department still has to clarify in terms of some of the backup documentation that's going to be required. So there will be more to come on that. Again, your bank that you work with will hopefully be able to provide you some of that information as it comes out. What we are finding, again, is some banks may require that you have a business checking account open already in the name of the business that you're applying for the loan. So with that, you want to go on to the next? Actually, Jim, you want to show a sample of the form, the application?
Two points here, though, Jim. On their last bullet regarding the business checking account, on the last call, attendees made note that I believe they needed a line of credit also with the Bank of America. They had certain accounts and it wasn't good enough. Do you remember that conversation?
Yeah, that was. It seemed like it was unique to Bank of America, but it's, it may be something. Every bank is going to have a slightly different take in this. So, the feedback that we got as of yesterday was as long as you had a business checking account that was already set up, because again, you would have gone through your know your customer requirements, and you would have been able to. They would be more likely to get you on the application list sooner rather than later. But yeah, that is something that seems like Bank of America, which maybe because of the size of them, they're so big that they may be trying to, use that as another way of saying, hey, here's how we're going to prioritize you. If you already have a line of credit and if you have a checking account, you're going to move to the top of the line.
And the other thing I'd note is on your slide, you mentioned January and February of 2020. And in the bill itself, in the CARES Act bill itself, which is over 800 pages, it mentions the calculation of the average payroll to be over the last 12 months. And so while it's not just January or the calendar year 2019, it's March 2019 through February 2020 for that calculation. Okay. Jim, can you see my screen?
Yep, you're good.
Okay. All right. So this is the latest and greatest application. It changed either last night or this morning. One of our customers were kind enough to send it our way. So you'll notice it may look similar to the one that you've seen earlier in the week. It is slightly different, but it is also from the Small Business Administration. It asks, do I have the right one?
Actually, no, Jim, I think, yeah, no, keep going.
There it is. I'm sorry. This, well, see, I was deceived. And I'm
Yep,
sorry
there you
about that. If I quickly toggle, you'll see that's the old and that's the new. And I didn't mean to do that. I didn't mean to add any confusion. So my apologies, but this is the latest one. Like I said, they're very similar. It's a very quick, basic form. There's only a few pages. Other than adding your contact information, but you'll notice that it says average monthly payroll. Ask for that one that you're going to calculate, and then it says multiply by 2.5, right? And that space to the right of it is the loan amount. Space asks for your number of employees, and that needs to be less than 500. Thereafter, it asks for certain information like who the owners are. It only gives 2 lines, but it wants you to add supplementally all owners that have at least 20% equity in your business. They've also issued this document here. This is a 31-page PDF file, which I will distribute to the team here, to the attendees. This was also given to us by the same customer, so we thank them for doing so. It is, we attempted to create our own document yesterday based on all the different information sources that we had received from professional advisors. Our document,
Sebastian,
is now exiting.
This one's 31, so assuming it's a little bit more comprehensive than ours, and it's the official document. So I want to get that in your hands. And then I point out this document, which many of you may have already seen. This came out earlier in the week. It's a 4-pager. It's from the U.S. Chamber of Commerce. I'd ask those online just to put their phones on mute. I hear some background noises. It's a very brief document that gives a very high-level view of the program. That's quite helpful. Am I eligible? And how much can I borrow? Again, someone's phone is not on mute, so it'd be great if you could. Working from home can be challenging, and I'm grateful that my dog's not barking in the background here. So anyway, I will circulate these as well. Let me go back to the presentation. Bear with me.
Unknown participant is now joining.
Is it here? And back. Jim, what do you see on your screen?
Yeah, it's the slide we were just talking about. So I think if you can scroll to the next one, that'd be good.
I'm not there yet on my side yet. There's a little bit of a lag, so bear with me. Can't access it. You're still seeing it?
Yeah, the original. We need slide 6.
There we go. Okay. Right. All right. Please, Jim, continue.
No, we got it. So this is really just
Is
again,
now exiting.
as we mentioned earlier, get that form in there ASAP. Be prepared that they're going to request certain documents. The ones that we just talked about in the last slide are clearly going to be information, pieces of information that they're going to want. But this list, which again, I won't go necessarily through every single one of them, we'll include it in this deck when we send it out. We anticipate that some of these banks are going to be even more stringent, and they're going to look for additional pieces of information from you guys that are similar to like the normal KYC type data requests, things like a confirmation of your business name, an IRS confirmation letter on your tax ID number, for example. They may want copies of your current driver's license and social security numbers as principals in the organization. So my guess is take a look at this information. It should be in your corporate records that you would have. Make sure you have it all handy, because I guarantee they may be asking at least some of these, depending on the banks of you within the short period of time. So again, get the information in, get the application in, and have this information handy, because they're going to be asking for it relatively soon. Okay. Yeah, in terms of, when we talk about covered payroll costs, which is really the baseline of what you're going to be using for your for the loan application, want to go through a couple of items just to make sure everybody is clear. because it's not just payroll costs per se. It gets a little bit broader than that, but it all relates to what you're providing to your employee base. So clearly, as we mentioned before, in your 941 forms, your payroll forms, your payroll registers, you're going to want to capture that true salaries and commissions and any other or like-kind compensation that you would be providing to these employees. A cash tip, I mean, that doesn't really apply to this team, but that would be part and parcel of this as well. Payments for benefits that you make, vacation pay, parental leave, medical, sick leave, anything like that you would have any of your employees in that category, that would count as well. So you would include them, those wages as well. Payments to healthcare concerns. So if you're paying a premium on behalf of your employees, that healthcare benefit would be included as a payroll cost. Likewise, I think we mentioned this before, any kind of retirement benefit that you're paying. If you're doing some kind of a match to a 401k plan that you might have, that expense that you incur would also be qualified as a payroll cost. We'll talk in a minute about payroll taxes and income taxes that are not allowed. However, if you are making employer payments to the state or locality that you're in, you can include that as compensation for your employees. And if you're a sole proprietor or independent contractor, yeah, whoever's that, if anybody,
whatever he was gonna do, I don't care.
If everybody
No
can
TV,
make sure
no TV, no iPad.
Thank you.
Our phones were muted automatically. Someone did that for us, which was great. Just unmute your phone now. We cannot hear you.
Sorry, guys. I didn't realize I was just preaching to myself here.
Yep.
So I don't know where I left off, but basically there's a lot of different components of what you can categorize as payroll costs. Use this list as a guideline, but there's certain things that are excluded from payroll costs. One in particular, the biggest that I think you should all note, is you've got to be able to make sure that you segregate out and understand that these payroll costs cannot go over. If someone has a salary of over $100,000, whatever that portion of it is over 100,000. If it's 130,000, you got to X out the 30K, and you can only go up and include a max of that annual salary of 100,000. As I mentioned before, any payroll taxes or income taxes on the federal level that you've paid are not included. They need to be excluded. And then last but not least, again, this is a U.S. bill, so it's very U.S. centric, and therefore any compensation that you may pay to an individual outside of the U.S. is not something that you can include in your payroll cost. Okay. Jim, you want to take the next slide?
Yeah, I can get to it. There we go. All right. What do I need to certify? As part of your application, you need to certify in good faith that. And so it's a laundry list here, and this is all items that are on that application. But in essence here, there's, in good faith, you are requesting this money to use for payroll, for workers' compensation, to keep them on staff or to bring them back on staff over time by the end of June. And I'm not going to go through each one of these here, but you can see that in general, there are certain things that you have to state in that application by checking the box. Jim?
Sure. This is again, this will be in the materials that we send out to you guys. But essentially, it's giving you a better understanding of how many employees you have, because when you look at this and you get to the pass this effort and you get the loan, and then you're going to have to go back and look for forgiveness, hopefully, right, of this loan. They're still going to want to do a comparison of what your number of full-time equivalents are. So this gives you a little bit of an idea of what that really means. It can be any employee within the time frame from March of 2019 to February of 2020, the average, of all of those full-time, part-time, or other seasonal employees that you might have as well. If you had a furloughed employees within that time frame, and that they received any kind of confirmation during that pay period, that 12-month pay period, that head count can also be used in the calculation. And then it's just the obvious, if you have volunteers or individuals that you are not making any payments to, they cannot be included as an employee, which is pretty obvious, right? And that's pretty much it. I mean, it's pretty intuitive, but it's something that you need to be prepared, because as you're going forward in this process, you need to be able, you at some point will need to be able to prove that you maintained at least the same amount of employees at the end of June of 2020 as you did in that 12-month time frame. Because again, this is all about making sure that we're protecting the employees and the payroll associated with those employees at these small businesses.
Someone asked in the last session, what if some of the employees left last year and then were rehired later, and the number of employees went up and down? How does that affect my compensation, my total payroll? Well, it all washes out in the average, right? You're taking the last 12 months, you're dividing it by 12, and that's the number. Whether you had 490 employees or 290 employees, the number is the number, because it's based on actual expenditures. Jim?
Yeah, I think this is really just a couple of different scenarios to figure out how you calculate it. I mean, we probably don't need to go through every single one of them. It's just a document for your reference that when you go to calculate your employees, you can look at these 3 different scenarios. I think it'd be helpful.
Okay. Affiliates, let me take a moment here. During our call with Nixon Peabody yesterday, they made note of this, the affiliate rule, meaning that if you're an organization that is a subsidiary of a larger organization, and your subsidiary is less than 500 employees, but the parent organization is much greater than the 500 employees, are you eligible to apply or not? And the answer is unfortunately not. It's no. The affiliate rule takes place here, and the larger number of employees is applied, and the smaller subsidiary would be ineligible. Jim?
Yep.
Jim, you there?
Yeah, I'm here.
All right.
Yeah, loan forgiveness. This is something that, I mean, for purposes of today's discussion, we'll talk a little bit about this, and this is also an area where there are still some guidelines and guidance from U.S. Treasury that still need to be presented.
Lost you.
So, it's just not fully locked down. But can you hear me now?
A little bit. You kind of cutting
hear me,
out a
Jim?
little bit. Yes, I can.
Oh, I'm sorry. Okay, can you hear me?
Yes.
Okay, let's try again. So again, this is an area where we're still waiting for additional guidance from Treasury. It's still a little up in the air, but from an overall perspective, when we get to the point where after June 30th comes around, there will be a reconciliation that's going to need to be made based on what your initial criteria were when you applied for the loan in the first place, right? So it's going to talk about the same thing. How many employees did you have? What were your wages that you incurred? How many employees, how many full-time equivalencies did you have? And there will be a calculation that you'll have to make. And at the end of the day, the thing that they really want to make sure happens is that, you can use this loan primarily for paying your employees, but obviously you need to pay your rent, right? You need to pay other service fees, utilities, etc. You can use the funds for that, but at the end of the day, you must make sure that at least 75% of this loan was paid for wages for your employees. Because again, that's really the context of all of this. So you would go through the same type of an analysis of what your payroll costs were, similar to the same types of costs that we just outlined before. You can add in any kind of mortgage interest or lease payments, gas, utilities, etc. And then that's when you would come back to basically coming up with this equation that's at the bottom of the slide here. And actually, we're going to take you through an example. I think it might be on the next slide, right, Jim?
Yeah, it is. And so I think this kind of illustrates everything we've said so far. There's two pieces to the spreadsheet. The top portion, which is the loan itself, and then the bottom portion, which is the loan forgiveness calculation. And this is, we're not sure if our numbers are totally correct here. So take it for what it is, and please consult your own tax or accountants, or just accountants in general, so they have the latest and greatest for you. But here's at least an illustration, a simple illustration to understand how we think it flows. So at the beginning, at the top, we've assumed a business that has a staff of 10 employees that earn less than $100,000 a year. And for simplicity, we said they all earn $50,000 per employee times 10, that's $500,000. And if you divide that by 12, you get a monthly average of $41,667. Then we said there's 10 more employees who make over $100,000 a year. But as we noted, only the first $100,000 is eligible for this application. So you take the 10 times the 100,000, that's $1 million. And you divide the million by 12 to get a monthly number of $83,333. We've also factored in some benefits. And we assumed a 35% rate on compensation. But remember, we did it on just the first 100,000 of the 10 employees who make that and more. What I don't know is the benefit rate applicable to the whole amount versus this prorated piece. So know that there could be a weakness in our illustration here. Nevertheless, we divided the annual comp number by 12 to come up with 43,750. When you add the monthly figures together, it totals 168,750. The loan is 2.5 times that. So simply took that number, multiplied it by 2.5 times, came up with a loan value of $421,875. We say on the right there that that's the equivalent of 10 weeks. Of course, there's 4 weeks in a month and 8 weeks in 2 months. So 2.5 times is 10 weeks. I say that simple math because the bottom, the forgiveness portion, is different. So isn't it's based on 8 weeks, not 10. So isn't the formula of the forgiveness. So if we look at the bottom half, where I say the monthly payroll of $125,000, which is the below and above $100,000 employees added together on a monthly basis. And I made up some numbers. You probably have a mortgage or rent, not both. I put in both, maybe in multiple locations. I threw in some utilities, and you have total monthly cost of $165,000. And multiply it by 2, not by 2.5, and it comes up to $330,000. So you borrowed approximately $422,000, and you were forgiven $330,000. So you'll see the definitions differ here in that the top portion is primarily based on compensation and benefits. The bottom portion is based on compensation and some overhead, more on an operating expense view. And the number, the application of number of weeks is different. Nevertheless, it's a very generous program to be able to borrow, whatever your loan is, and to be forgiven a large portion of it. That portion cannot exceed the actual loan value itself.
And the other thing, Jim, just to note is that the $125,000 in your example of the monthly payroll is actually over the 75% threshold of the total, right? So if that number was 100,000, for example, right? Because you did let some employees go, or you made a reduction in your salaries. You said, hey, you got to take a 30% pay cut or something like that. So if that number falls below that, this number would not be as high of a forgiveness level. You'd have to calculate that down.
Thank you, Jim. I would have overlooked that. So thank you for saying that. So yeah, in my example, it happens to be 76%. That's right. So be careful of that. And, you know, I'm not sure if I mentioned at the very beginning that this program is kind of viewed as being 90% finalized. The government is still ironing out some of these details, especially on the forgiveness side. Nevertheless, with all faults, move forward and apply. And you can work out some of these details later. You get 6 months of deferment, you get 0.5% of a loan, and a very small, perhaps remaining balance after the forgiveness. So I believe that's our last. Yeah, that's the last page. There's a few pages in the appendix. We went a little bit long on the discussion here. What I'd like to do now is pause and allow time for some Q&A and comments. I've turned on the meeting chat feature, so if you see the little bubble, you can write questions. You can take your phone off mute and ask questions verbally. So we can also have time here at the same time. I'd love to hear from you and your personal experiences of what's gone well and what hasn't gone well, and your personal experiences of applying for these loans if you've experienced anything. Jim, is there anything else you want to go over? Anything we overlooked?
No, I think we covered it, Jim.
So all some of the questions are coming in. Sorry, they've gone kind of fast here on the chat side. Let me go back up here. Dana writes, so we fill this out online and then bring them to our local bank where we have an existing relationship. So Dana, there certainly should be an online application for your existing relationship with your bank, whether it's the SBA application or their own. I'm not hearing, unless people have actual experience, that they're going to a bank. I think they're electronically delivering it. That might be a hardship, Jim, with the amount of material you just showed, but I was assuming that it'd be done in PDF form. Does anybody have experience on that can help us out with Dana's question?
Hey guys, this is Greg Teagues. I've been working with my local bank for my wife's business. They're still sending out an older form, the one that you got last night or that was sent out last night. And they are asking us to have that filled out and sent back electronically through their share box so that more entities can reach it at once. I don't know if that helps or not.
It does. Thank you, Greg.
Hey, Craig, thanks, Craig. This is Ed Pullen. I know in working with our local bank, a new form was sent out this morning, but I think it's also important, as my banker suggested, that they get with your accountant and work between the two. So if your bank's familiar with the SBA loan association, but get with your accountant, make sure your numbers are accurate and that you get it right, kind of get it right the first time out. So that's what I was told.
Yeah, that's good advice. Willis also wrote in, the banks are not ready to go yet. And yeah, we're hearing that too. We're even hearing that from the bigger ones, like the JP Morgans. They're not ready yet. I think I mentioned they're going to use their own form. And I don't believe that's even ready yet. So while applications can be submitted today, your financial institution may not be ready, which is a little bit frustrating.
Yeah, I can confirm that in Wisconsin as well. They're saying there's no need to rush this back to us. We're not even ready to start taking the applications yet. So Interesting. Are you going to send out the most recent form that you have to everybody? Yeah. Okay.
Yeah. So what I'm going to do, this is Jim Young speaking. I'm going to send an email to our sales leaders who have your contact information. That's how you all got these invitations. And I'll include the application. I'll include this presentation. I'll include the PDF that I referred to that we sent out yesterday. So some of this might be redundant to you. I'll do the Chamber of Commerce quick 4-pager. So you'll have what I have. Okay. Any other questions or good advice? All right. I will leave you with this. My name again is Jim Young. My email address is very simple. It's jim.young@legrand.us. It was in that invitation. Happy to correspond with you if you have any additional questions. We care for you guys deeply. You are our lifeline. And so we want you to be a success. We hope that you're successful pursuing the Paycheck Protection Program. And you get some money from the government. It's there for you. We hope you get your share. And until we speak again, be safe, be well, and thank you for your time today.
Yeah, thanks everybody. Much appreciated. And hopefully this